The world runs on electricity, and electricity increasingly runs on nuclear power. Right now, the United States government is pushing harder than ever to bring nuclear energy back to the center of American power generation. And at the heart of that push is one element: uranium, the fuel that powers nuclear reactors. It's the element that governments around the world are racing to secure. And today we are going to talk about a company that just made history. A company that just opened the first new uranium mine in the United States in over a decade. And their stock is sitting at a price that has analysts calling it a strong buy. Stay with me. Think about what is happening in the world right now. Artificial intelligence is exploding. Data centers are consuming more electricity than entire cities. Electric vehicles are putting new pressure on power grids. And solar and wind, as powerful as they are, cannot provide the consistent baseload power that a modern economy demands. Nuclear can. It runs 24 hours a day, produces zero carbon emissions, and it requires one thing above everything else: uranium. The United States currently imports the majority of its uranium from foreign countries: Russia, Kazakhstan, Uzbekistan. And right now, with geopolitical tensions rising, the United States government is making one thing very clear. America needs its own uranium supply, from its own mines, on its own soil. And one company headquartered in Corpus Christi, Texas, just answered that call. If you want to find opportunities like this every single week before the crowd does, hit subscribe right now. Let's keep going. This company was founded in 2003. For over 20 years, they have been quietly building something that most investors have never paid attention to. They developed a mining method called In-Situ recovery, ISR for short. This is not traditional mining. There are no open pits, no massive excavations, no mountains of rock. Instead, they inject a solution underground. That solution dissolves the uranium, then they pump it back up to the surface. Clean, efficient, low cost. It is one of the most environmentally friendly ways to extract uranium in the world. And this company does it better than almost anyone else in America. They have 3 operating platforms across the United States. One in Wyoming, called Christensen Ranch. One in South Texas, called Burke Hollow. And one more called Ludeman, planned for a startup in 2027 together. These platforms give this company licensed annual production capacity of 12 million pounds of uranium. 12 million pounds. That is the largest licensed uranium production capacity in the entire United States. But here is the moment that changed everything for this company. On April 8, 2026, they received approval from the Texas Commission on Environmental Quality, and they began production at Burke Hollow, the first new In-Situ recovery uranium mine to open in the United States in over a decade. The United States Energy Secretary himself commented on this milestone. Not a press release buried in a news feed. A statement from the U.S. Energy Secretary, because this is not just a company story. This is a national energy security story. And here's something that almost nobody is talking about. Okay, Burke Hollow is built on a 20,000-acre property. Right now, only about half of that property has been explored. Half, which means what they have already found. And what they are already producing is only the beginning of what this project could ultimately deliver. Now let us talk about the numbers, because this is where the story gets very compelling. This company sells its uranium at $101 per pound. $101. And they do this with zero hedging. That means they are fully exposed to uranium prices. And right now, uranium prices are strong. Their cash cost of production is approximately $29.90 per pound, which means for every pound they sell, they are generating over $70 of gross profit. $70 of margin per pound on 12 million pounds of licensed annual capacity. You can do that math. And they have the financial strength to execute on that capacity. $818 million in liquid assets. No debt. Zero. A current ratio near 29, meaning for every dollar of short-term debt, they have $29 of liquid assets to cover it. This is not a fragile startup. This is a company with the financial firepower to build out every single one of its production platforms. The company we have been talking about this entire time is Uranium Energy Corporation, ticker symbol UEC, trading on the NYSE American Exchange. Current price approximately $13.57. 52-week high, $20.34. 52-week low, $5.03. From that 52-week low, this stock has already delivered a gain of 170%. And yet analysts believe there is still significant upside remaining. H.C. Wainwright has a price target of $26.75. Roth Capital buy rating with a target of $17. TD Securities target of $21. The average analyst price target across all coverage sits around $21. From today's price of $13.57, that average target represents over 50% upside. And the most bullish analyst sees over 97% upside from here. Now let us look at what is coming. The next earnings report for UEC comes on June 1st, 2026. This will be the first earnings report after Burke Hollow entered production. The first report showing real uranium output from 2 simultaneous ISR platforms. The first report giving investors a look at what this company can actually produce at scale. That earnings date could be a significant catalyst. And there is one more thing. The Trump administration is actively considering military options to secure Iranian uranium. Iran holds some of the world's largest uranium deposits. If those supplies are restricted or if geopolitical tensions around uranium escalate, further Western-aligned uranium producers like this company become even more strategically valuable. The demand side is already strong. Supply side is getting tighter. This company is sitting at the center of both forces. Here is what I want to leave you with. America needs uranium. More than it has needed it in decades. Nuclear power is coming back. Government policy is supporting domestic production. And one company with no debt, $800 million in liquid assets, has 12 million pounds of licensed annual capacity, and the only 2 operating ISR platforms in the United States is producing that uranium right now. Not planning to, not hoping to. Right now. Is this a risk-free investment? Absolutely not. Uranium prices can fall, production can underperform. The company is still posting net losses as it scales. Mining operations always carry execution risk. Do your own research, read every filing, understand every risk before you make any decision. But when you combine a government-supported energy transition, a domestic production mandate, 12 million pounds of licensed capacity, 800 million in liquid assets, 0 debt, and analysts projecting 50 to 100% upside, that is a combination that deserves serious attention.